Look, something extraordinary just happened in the silver market that most people completely missed. While everyone's been distracted by the headlines, silver quietly crossed a threshold that historically only appears once every decade. And what happens next could either make early movers a fortune or leave latecomers wondering what they missed. I'm going to show you exactly what's happening right now, why this moment is so critical, and most importantly, what the smart money is doing about it. Because here's the thing, the silver market doesn't give you many chances like this. When these setups appear, they move fast, and right now, we're sitting at one of those rare inflection points where the next move could be massive. Let me start by showing you what just happened. Silver recently pushed above $66 per ounce. Now, if you're not deeply embedded in the precious metals markets, that number might not mean much to you. But to those who understand market structure, that price level represents something far more significant than just another number on a chart. You see, silver has been building a pattern for nearly a decade. Not months, not a couple years. An entire decade of price action that's been forming what technical analysts call a cup formation. This isn't some obscure indicator that only works in hindsight. This is one of the most reliable long-term patterns in technical analysis, and it's been developing in plain sight. Think about what a decade of price action means. That's not noise. That's not random market fluctuation. That's institutional positioning. That's central banks making decisions. That's industrial demand shifting. That's the entire global monetary system going through a transformation, and silver is sitting right at the center of it. But here's where it gets really interesting. This cup formation isn't happening in isolation. At the same time, silver's ratio to the S&P 500 is doing something it hasn't done in years. It's rising, and when that ratio starts climbing, it's telling you something profound about where institutional money is flowing. Let me explain why this matters. When silver outperforms the stock market, it means investors are shifting from paper assets into hard assets. They're moving from confidence in the system to protection from the system, and right now that shift is accelerating. The current price action is showing us something we haven't seen since the last major silver bull run. We're watching silver break through resistance levels that have held for years, and it's doing it with the kind of momentum that suggests this isn't a false breakout. This is the real thing. Now, I know what you're thinking. But silver has had false breakouts before. How is this different? Fair question. Let me show you why this time the setup is fundamentally different. First, look at the supply situation. Silver mine production has been essentially flat for years. We're not discovering major new deposits. The easy silver has already been mined. Meanwhile, industrial demand is exploding. Solar panels, electric vehicles, 5G infrastructure, medical applications, every major technological trend of the next decade requires silver. And not just a little bit, massive amounts. A single solar panel uses about 20 grams of silver. Doesn't sound like much, right? But when you're talking about the global push toward renewable energy, when countries are mandating solar installations, when entire power grids are being rebuilt around solar technology, those 20 grams per panel add up to millions of ounces of demand that has to be met from a supply that isn't growing. Electric vehicles are even more dramatic. Each EV uses roughly 25 to 50 grams of silver in its electrical systems. Now multiply that by the millions of electric vehicles being produced each year, and you start to see the scale of the demand shift we're talking about. But here's what makes this moment so critical. This isn't just about industrial demand. This is about monetary demand coming back into the silver market in a way we haven't seen in over a decade. Remember 2011? Silver hit nearly $50 per ounce. People were lined up outside coin shops. Premiums on physical silver were through the roof. The market was in a frenzy. Then it crashed, hard. Silver spent the next several years in a brutal bear market, bottoming around $14 in 2020. That crash scared a lot of people out of silver. It created a generation of investors who got burned and swore they'd never touch silver again. But here's what's different now. The people buying silver today aren't the same people who bought in 2011. They're not retail investors chasing momentum. They're institutions, they're family offices, they're sovereign wealth funds. Look at what central banks are doing. They're not just buying gold anymore. They're diversifying into silver. Why? Because they understand what's coming. They see the same supply-demand imbalance that we're looking at. They see the monetary system shifting. They see the dollar's role as the global reserve currency being challenged, and they're positioning accordingly. The BRICS nations aren't just talking about creating an alternative to the dollar. They're actively building the infrastructure to do it, and precious metals are a core part of that strategy. When you see countries like China and Russia accumulating massive amounts of gold and silver, that's not speculation. That's strategic positioning for a new monetary order. Now, here's where the technical picture gets really compelling. That cup formation I mentioned earlier? It's not just a pretty pattern on a chart. It represents a decade of accumulation. Think about what that means. For 10 years, while silver was out of favor, while everyone was chasing tech stocks and crypto, someone was quietly accumulating silver. Massive amounts of it. Who accumulates an asset for a decade? Not day traders, not retail investors. Institutions accumulate for a decade. Central banks accumulate for a decade. People who understand the long-term fundamentals and have the patience to wait for the setup to mature. And now that setup is maturing. The cup is complete. The breakout is happening. And the next phase, the handle formation and the subsequent move higher, that's where the real gains typically occur. Let me give you some historical context. In 1971, when Nixon closed the gold window and ended the dollar's convertibility to gold, silver was trading around $1.50 per ounce. Over the next 9 years, it climbed to $50. That's a 3,200% gain. Now, I'm not saying we're going to see that kind of move again, but I am saying that when silver enters a major bull market, the gains can be extraordinary. In 2008, during the financial crisis, silver bottomed around $9 per ounce. By 2011, it had reached nearly $50. That's a 450% gain in less than 3 years. Again, not predicting we'll see exactly that, but it shows you what silver is capable of when the fundamentals align and momentum builds. What's happening right now has elements of both those historical periods. We have monetary instability like we had in the 1970s. We have financial system stress like we had in 2008. But we also have something new, a massive industrial demand component that didn't exist in those earlier periods. The solar industry alone is projected to consume over 150 million ounces of silver annually by 2030. The electric vehicle industry could add another 90 million ounces of annual demand. 5G infrastructure, medical applications, water purification, the list goes on. We're talking about hundreds of millions of ounces of new industrial demand hitting a market that produces less than 1 billion ounces per year total. And here's the kicker. A significant portion of that billion ounces comes as a byproduct of other mining operations. Silver isn't usually the primary target. It's what you get when you're mining for copper, lead, zinc, or gold, which means silver supply is largely dependent on the economics of those other metals. If copper prices fall and copper mines shut down, silver supply falls too, even if silver prices are rising. This creates a supply situation that's fundamentally different from almost any other commodity. Silver can't just ramp up production in response to higher prices the way oil or copper can. The supply is structurally constrained. Now, let's talk about what's happening in the physical market, because this is where things get really interesting. The spread between paper silver prices and physical silver prices has been widening. When you go to buy actual silver coins or bars, you're paying significant premiums over the spot price. Why? Because there's a shortage of physical metal. The COMEX, where silver futures are traded, shows plenty of silver available, on paper. But when people actually want to take delivery of physical metal, suddenly there are delays. Suddenly premiums spike. Suddenly you're waiting weeks or months for your order. This disconnect between paper and physical markets is a warning sign. It's telling you that the paper market, where most of the price discovery happens, might not be reflecting the true supply-demand situation in the physical market. Think about what happened with the Reddit silver squeeze a few years ago. Retail investors tried to corner the physical silver market by buying up all the coins and bars they could find. They didn't succeed in breaking the COMEX, but they did expose something important. The physical market is much tighter than the paper market suggests. Now, imagine what happens when institutional buyers start demanding physical delivery. When sovereign wealth funds decide they want actual metal, not just paper claims on metal. When central banks increase their silver reserves, the physical market simply cannot absorb that kind of demand at current prices. This is why the current price action is so significant. We're not just seeing a technical breakout. We're seeing the early stages of a fundamental supply-demand imbalance that could take years to resolve, and the only way it resolves is through significantly higher prices. Let me paint you a picture of what this could look like. Imagine you're a solar panel manufacturer. You need silver to build your panels. It's not optional. There's no substitute that works as well. Your entire business depends on securing a steady supply of silver. Now imagine silver prices start rising. Fast. What do? You can't just stop making solar panels. You have contracts. You have customers. You have a business to run. So you pay up. You secure your silver supply at whatever price you have to pay. And when every solar manufacturer in the world is doing the same thing, when every EV maker is competing for the same limited supply, prices don't just rise, they spike. This is the scenario that's starting to unfold. We're in the early innings of a supply crisis that most people don't see coming. And by the time it becomes obvious to everyone, the easy money will already have been made. Now, here's something important I need to mention. If you're sitting on significant retirement savings, we're talking $100,000 or more in traditional accounts, you might want to look into how precious metals fit into a retirement strategy. I've put together a free guide on gold IRAs that explains how you can get physical metals into your retirement account without triggering taxes or penalties. It's in the description below. Just something to consider as you're thinking about portfolio diversification and wealth protection. Worth checking out if that's relevant to your situation. All right, back to where this price is headed next. Because understanding the setup is one thing, knowing what to do about it is another. The technical picture suggests we're at the beginning of a major move, not the end. That cup formation took a decade to build. The breakout is just starting. If this follows historical patterns, we could be looking at a multi-year bull market in silver. But here's what you need to understand about silver bull markets. They don't move in a straight line. Silver is volatile. It can drop 20% in a week and then gain 40% the next month. It's not for the faint of heart. But for those who understand the long-term fundamentals and can handle the volatility, the potential rewards are substantial. Let me show you what the smart money is doing right now. They're not trying to time the perfect entry. They're accumulating positions. They're building exposure over time. They're thinking in terms of years, not days or weeks. Look at the ETF flows. Silver ETFs have been seeing consistent inflows. Not massive, attention-grabbing inflows like we saw in 2020 and 2021. Steady, persistent accumulation. That's institutional money. That's patient capital that understands the thesis and is positioning for the long term. Look at the mining stocks. Silver miners have been outperforming the metal itself in recent months. That's typically what happens at the beginning of a bull market. The leverage in the mining stocks starts to work. A 10% move in silver can translate to a 30% or 40% move in a well-positioned mining stock. But here's the thing about mining stocks. They're not just a play on silver prices. They're also a play on operational efficiency, management quality, reserve growth, and a dozen other factors. If you're going to invest in miners, you need to do your homework. You need to understand which companies have the best deposits, the lowest costs, the strongest balance sheets. The physical metal is simpler. You buy it, you store it, you own it. No counterparty risk, no management risk, no operational risk. Just pure exposure to the silver price. That's why so many investors prefer physical metal as their core position, with mining stocks as a more speculative, leveraged play on top. Now, let's talk about the geopolitical dimension because this is becoming increasingly important. The world is fragmenting. The post-World War II order that's been in place for nearly 80 years is breaking down. We're seeing the emergence of competing power blocks. We're seeing the weaponization of the dollar through sanctions. We're seeing countries actively trying to reduce their dependence on the dollar-based financial system. What does this have to do with silver? Everything. Because in a world where trust in fiat currencies is declining, where the dollar's dominance is being challenged, where countries are looking for alternatives to the current monetary system, precious metals become increasingly important. Gold gets most of the attention in this context. It's the traditional monetary metal. It's what central banks hold. It's what's used for international settlements. But silver has always been gold's monetary cousin. Throughout history, silver has served as money alongside gold. And in a world where the monetary system is being restructured, silver's role could become much more prominent. Think about what happened in 1980. Silver hit $50 per ounce. Why? Because the Hunt brothers tried to corner the market? That's the story everyone knows. But the deeper story is that the 1970s were a period of massive monetary instability. Inflation was raging. The dollar was weak. Trust in the financial system was low. And silver, along with gold, became a refuge. We're entering a similar period now. Inflation has been running hot. Central banks have been printing money at unprecedented rates. Government debt levels are at all-time highs. The financial system is more fragile than most people realize. And once again, precious metals are starting to attract attention as a store of value. But here's what makes this moment different from 1980. Back then, silver's primary use was monetary and photographic. Today, silver is essential to the technological infrastructure of modern civilization. You can't build the green energy future without silver. You can't electrify transportation without silver. You can't expand 5G networks without silver. This means silver now has a floor under its price that didn't exist in 1980. Even if monetary demand disappeared tomorrow, industrial demand would keep silver prices supported. But monetary demand isn't disappearing. It's growing. And when you combine growing monetary demand with exploding industrial demand and constrained supply, you get a setup that's potentially more powerful than anything we've seen before. Let me give you another historical parallel. In the early 2000s, copper was trading around 60 cents per pound. Then, China started industrializing at a massive scale. Suddenly, copper demand exploded. By 2011, copper had reached $4.50 per pound. That's a 650% gain driven primarily by industrial demand. Silver is in a similar position now. We're at the beginning of a massive industrial transformation. The electrification of everything, the digitization of everything, the greening of everything. And silver is essential to all of it. But unlike copper, silver also has monetary properties. It's not just an industrial metal. It's a precious metal with thousands of years of history as money. So you're getting both the industrial demand story and the monetary demand story in one asset. Now let's talk about what could go wrong. Because no investment thesis is complete without understanding the risks. What could derail this silver bull market? First, a major technological breakthrough that replaces silver in key applications. It's possible. Scientists are always looking for cheaper alternatives. But here's the thing. They've been looking for decades, and silver is still the best conductor of electricity. It's still the most reflective metal. It's still the best catalyst for certain chemical reactions. Finding a replacement that's both cheaper and better is a tall order. Second, a major new silver discovery that floods the market with supply. Again, possible, but unlikely. The geology of silver deposits is well understood. The easy deposits have been found. Any major new discovery would take years to develop into production. And even then, it would have to be massive to significantly impact the global supply-demand balance. Third, a collapse in industrial demand due to a global recession. This is the most realistic risk. If the global economy tanks, demand for solar panels, electric vehicles, and electronics could fall. But here's the counterpoint. In a major recession, monetary demand for silver typically increases. People flee to hard assets. So you might lose on the industrial demand side, but gain on the monetary demand side. Fourth, central bank intervention in the silver market. Governments could theoretically try to suppress silver prices to maintain confidence in fiat currencies. Some people believe this already happens through the paper markets, but even if it does, there's a limit to how long you can suppress a market where physical demand exceeds physical supply. Eventually, reality asserts itself. So yes, there are risks. There are always risks. But when you weigh the risks against the potential rewards, when you look at the fundamental setup, when you see what the smart money is doing, the risk-reward ratio looks compelling. Here's what I think is going to happen over the next few years. I think we're going to see silver prices significantly higher than they are today. I think we're going to see periods of extreme volatility. I think we're going to see mainstream media finally start paying attention to silver when it's already made a major move. And I think we're going to see a lot of people wish they had positioned themselves earlier. The question is, what are you going to do about it? Are you going to wait until silver is at $100 per ounce and everyone is talking about it? Or are you going to position yourself now while the setup is still developing, while most people are still ignoring it? Look, I can't tell you what to do with your money. I'm not a financial advisor. I'm just someone who studies markets, who looks at the data, who tries to identify major trends before they become obvious to everyone. And right now, everything I'm seeing is telling me that silver is setting up for a major move. The technical picture is bullish. The fundamental picture is bullish. The supply-demand picture is bullish. The geopolitical picture is bullish. The monetary picture is bullish. When all these factors align, when you get this kind of confluence, that's when the really big moves happen. Think about where you want to be a year from now, 2 years from now, 5 years from now. Do you want to be looking back at this moment, at this setup, wishing you had acted? Or do you want to be positioned to benefit from what could be one of the major investment themes of this decade? The silver market is giving you a signal right now. It's telling you something important is happening. The question is whether you're going to listen. Because these moments don't come along often. And when they do, They don't wait for everyone to get comfortable before they move. The smart money is already positioned. The institutions are already accumulating. The central banks are already diversifying. The industrial users are already securing supply. The only question is whether you're going to join them or watch from the sidelines. This is your moment. This is your opportunity. Silver just hit a major turning point, and which way it goes from here could determine whether you're part of one of the great wealth transfers of this decade or just another person wondering what happened. The choice is yours, but make it soon, because the market isn't going to wait.